Let's take a quick look at the dollar and see how this is impacting things. And as you can probably imagine, weaker jobs numbers here this morning are driving the dollar down yet again. Job openings were incredibly, surprising to the downside, not in a good way. And that caused the dollar to just sink yesterday. And notably, the dollar was up right before the news, and then JOLTS came out, right? Which the JOLTS job opening is basically, it is a report that gives us an ahead of time look kind of at employment, right? It looks at and it says, well, how many jobs are opening? How many, signs are in the window, if you will, that says help wanted, right? Picture, all those local restaurants that have like the help wanted sign, basically JOLTS jobs came out. The job openings numbers were really disappointing, and it caused the dollar to sink pretty quick. Now, how does that impact you and I as traders? Well, obviously, if you're shorting the dollar in some way, that obviously would have helped your trade a lot, right? If you were short USD/JPY, if you were short dollar Swiss, if you were long euro dollar, if you were long pound USD, right? Some of those dollar crosses are probably having really good days here today. Look at this euro dollar breakout. The bulls have an impressive thing going on here, and you can see the remnants of my analysis. I thought we were going to go back lower. I didn't have any trades on, thankfully, but you can see we never even made it back down to the previous lows as I thought we would. In fact, what we got is the exact opposite. We got a huge breakout candle. And I love this candle here. What you can see is that look at how much strength came in. So sellers were in control, sellers were in control, sellers were in control. And then boom, this candle changed the narrative. Not only did it shoot to the upside, but there's been several opportunities here overnight, if you were trading a London session, etc., to catch this euro dollar move higher. So congrats to euro dollar bulls. This is a nice little move here. And now we have to kind of change targets around and talk about where we think price may go. And I think if you're looking at the euro, guys, pretty clear that a major level of resistance that's kind of ahead of us is this 1.091, where we previously saw sellers get really, really strong. Right? Price came up, rejected again. So it does look like now that we've got a little bullish momentum going on, a natural place for price to go would be perhaps to make a retest of that previous zone of resistance. Hopefully that makes sense, but that is, again, a short-term target where I think the euro may go with some of this dollar weakness. We've had some really, really weak US dollar news, right? Job weakness in 2 out of the 2 reports that we've really gotten this week that were notable. JOLTS job openings were less than expected, and ADP, so the estimates for NFP basically, were also disappointing here this morning. So story is playing out, guys. The dollar weakness is kind of coming back into play, and perhaps these dollar crosses have some room to move. So yeah.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Anyways, yeah, so let's see. Jay says, I got in on a pound Aussie last night at 1.95178 for my first trade using the EDGEFINDER. What's pound Aussie up to? Let's take a look at the pound. Frank was telling me that the pound was doing some craziness the other day. So let's take a look at the pound. So pound Aussie, 1.9517. Oh, very nice. Looks like you caught kind of the lows of this support zone, which is beautiful. Congrats, Jay. Love that. Yeah, again, kind of, an overall upward trend off of the daily chart. It's been a little bit under pressure recently, but pound Aussie is definitely an interesting pair to keep an eye on right now. I am personally still very focused on the NASDAQ. I do have a long position on the NASDAQ that I've had on for a little bit here. And this jobs number stuff is just really helping out my trade. I'll show you guys where I'm at with it P&L wise. I'm up $4,500 on this trade at this point. This thing has become a monster mover for me, and you know, we're going to see if this thing wants to keep going. My job actually from here is to manage the trade. Speaking of which, guys, I need to go ahead and trail a stop on this trade. My NASDAQ trade has really run its, you know, its length here, and we've actually broken out of resistance here. So not only that, we've now started to see a nice bounce off of this pullback, and with GDP numbers coming around the corner, I think it's time that I go ahead and trail a stop loss on this one. So I'm actually going to do that here while we're on stream. So guys inside of the Discord, let me go ahead and say this. I'm going to be updating my trade here. So bear with me for the next minute or so. I'm just going to be updating my trade, and I'll break this down so everybody here on YouTube can kind of understand the concept behind what I'm doing. So basically, I entered the NASDAQ last Friday. So this is a couple days into my swing trade, and this thing is just a monster mover, right? We've just had a huge run up. I picked it up and barely missed a stop. My stop placement in this one saved me, saved by the bell, if you will. And I've got my stop loss trailed here. Again, I showed you guys, here's my P&L. So I'm currently sitting $4,600 on this trade. And my goal now is to manage the trade profitable, or properly. So let's talk about this. Where am I going to move a stop loss? Am I just going to drag this stop right up here? I am actually not going to do that until we get a break through the previous highs. Okay. So at that point, I might trail stops a little tighter, but for now, what I'm going to go ahead and do is I'm going to go ahead and move stops below this previous structure here, but give it some room. Okay. So we had a breakout of this previous resistance. My goal now is to go ahead and move this stop loss, and I'm going to go ahead and put it right around here. Give the trade some room. We'll tighten up just a little bit. Goal is to leave some room here so that if this thing kind of comes back and does a little bit of a whipsawing around that price level, I'm not going to get likely trailed out as easily. Now, at this point, if I do get trailed out, it's all good. I'm still up, like I mentioned, the trade is running at like, $4,000 profit. So what I'm going to do now is I'm going to go ahead and trail my stop, guys. So let me just make sure I am all set on this. So I'm going 15,266 is where I've got it. So I'm going to do 266, just a little tighter there. All right. So stop loss is going right there, guys. We're trailing in this trade. Let's see what we get out of GDP numbers here this morning. Again, I'm going to keep the dollar index pulled up so we can keep an eye on this one and see if it does impact the trade. Here we go. All right, guys, and GDP numbers should be making their way out now. Let's see if they did in fact print, pending still. And there goes a little bit of dollar slip to the downside. GDP numbers still not out on FOREX Factory. And look at that, the dollar continues to sink ahead of even FOREX Factory showcasing the numbers. There it is, 2.1%. That is the number, guys. Wow. Interesting. This has got to be a slap in the face to the Fed, right? Well, not a slap in the face. Actually, it's something to pay attention to for the Fed, right? GDP numbers coming out, job growth slowing. I mean, this is what the Fed has been after, and now they're getting it, right? The Fed is seeing slowdown in the economy. We've been reporting the news every day here on the live streams, and this is just another number coming out showing some signs of weakness. Is that helping my NASDAQ or hurting it? We love to see it. The NAS trade is still going further. It's like when they, like when they're like doing the like the UFC or like rings, and they say, and still the world champion or whatever. It's like NASDAQ right now, and still the world champion. This thing is just flying high and does not want to quit. We've just trailed stops, like I said. This single trade, this is crazy, guys. I was in, I'll tell you the numbers. I put it on my Instagram story. If you follow me on Instagram, hit me up there. I was down $35,000 on my trading account, which, granted, that's a lot of money, but I'm working on a pretty large size trading capital basis. So it was nothing crazy. It was like 3 or 4%. And so anyways, I'm down this amount. This single NASDAQ trade, an index move, has brought me back to just down like 9,000. Like, it has been a monster mover. And all I've done is basically, you can see at this point, we are floating, what is this? This is a 4.31 to 1 risk reward trade right now, which is just phenomenal. Rob says, you're making me regret closing my NASDAQ position at 15,050. I'm not trying to make you feel any sort of way. I'm just managing my trade. The thing is, guys, there's always a, in hindsight, right? It's very easy to be like, oh, I should have held, or I should have, could have, would have done this, right? Sometimes I trail stops and I look foolish for doing it, right? Sometimes I trail a stop. Let's say I trail the stop to break even and this market just comes back, tags me back out, and then goes on without me. That's happened to me so many times. And it's so frustrating still after 8 years of doing this. Gold is really, really strong. How do you play this gold day? What do you guys think? Are you guys bullish on gold? Do you bearish on gold? Let us know in the chat real quick. Light up the chat if you would. Let me know what you think about gold. Are you bullish? Are you bearish? I know a lot of traders in the audience here are big gold traders. Again, dollar weakness here right now is coming in strong, and it does actually look poised to continue. But again, you have to be careful because NFP is right around the corner and it could change everything. Remember that NFP is the dominant piece of news that's coming out this week. So yeah. Anyways, how do you play gold from a technical analysis perspective? I think we wait for pullbacks. That would be my take, right? And we might not get that pullback. You have some supportive structure here. I would say around 1926. And if you're more of a day trader, maybe you're trading this momentum. Here's what I would say. I know day traders are going to look at this level here. They're going to look at this 38.2 and they're going to say, wow, is this a level here, right? Is this 38.2 a level to buy, right? It's not that far away. You may get an opportunity to pick it up today on gold. I would say if you're looking at this level, right? Let's zoom in just a little bit closer. We'll do this on the hourly here. So if you're looking at gold and you're saying, well, what about a pullback here? 1934, what do you think? Well, here's what I would say. Not a terrible idea. Gold looks really strong. Momentum is really hefty. There are some headwinds to gold though. So you have to be cautious both on the fundamentals side as well as the fact that on the technical side, again, I think your fair value on gold right now, in my opinion, is a bigger pullback back to this kind of area of support here. This looks so much cleaner, right? If I'm talking about kind of fair value on this trade. And when I say fair value, I'm talking about look at the way this market is trending and ask yourself, do I want to be buying way above this kind of line, this upward trend line, right? Buying up here, you're playing a risky game, right? Buying down here, I'd say you're probably playing a more calculated risky game. You're always playing risky games when you trade, but by risking small and waiting for setups that really make sense, you can set yourself up for a lot better, risk rewards and that sort of thing. I'm bullish on gold. I've been holding it since the 23rd of this month. I'm glad I'm on this trade. Congrats, Martin. That's awesome. Good for you. So yeah, I'm in a sell to the trend line. So this is also, I'm gonna tell you my take on this too. Trying to sell this back to the trend line, you may say, well, okay, I'll buy it down here. Maybe I'll just short until it gets there. You may be able to get away with that sort of trade. I know traders who trade that way and they do all right. I'm not saying you can't make money doing that, but this is probably one of the hardest trades in the playbook. Okay. People love to say, I'm going to play the pullback. I'm just going to say this, in a roaring uptrend, this is probably the hardest trade in the book. And it's what so many retail traders are doing. Let me give you guys a little bit of let's take a look at something. I bet you retail is like 50-50 on this, but let's go double check. I'm going to pull up retail sentiment. And let's take a look at what the amateur traders on average are doing with gold right now. So I just added it to the list. Okay, yep, about 50-50. So retail traders are 53% long, 47% short. So there's really not a bias here. But I can tell you guys that if gold keeps going up, what's going to happen is that the retail traders are going to start piling in shorts. They're going to short this thing, short this thing, short this thing. And what you have to be very careful about with retail traders is that sometimes they short here thinking, oh, I'm smart, I'm going to catch the pullback. And what does the market do? The market rips higher and just grabs so many traders stops on the way up. This story has played out so many times in the markets. If you guys, let me give you an example. Let me give you a more current example. Okay, so guys, look at this. Dollar yen. Let's look at dollar yen. Retail traders right now are super short. 73% of retail positions are on the short side, at least in the data that we've sourced here on the EDGEFINDER. Well, look at the dollar yen. Look at the dollar yen. Retail traders are very short on this market, and it's done just nothing but go up and up and up. Okay? So retail traders are getting destroyed in this move. So this is not a new thing. This is a recurring pattern in the markets. Take a look at, let's do another one, dollar Swiss, the opposite effect. Dollar Swiss, retail traders are like really, really long on this one. And so this one, you may say, well, now it's gone up. So retail traders are not always wrong, but I can tell you they were very long over here too, and they got destroyed in this move. So sometimes the retail trader is right, but most of the time, from my experience and watching these streams, if you watch for a while, you know, most of the time when the market's sinking like this, they're buying the dip and holding the bag and getting crushed. So I just want to be, caution people when they think about, fading a move. Be careful, because fading a move is probably the retail trader's favorite strategy on average, at least from my experience working with traders, as well as looking at retail sentiment for all these years. We can also take a look, though, this might be eye-opening here for you guys, is the COT reports. Let's take a look now at what big money is doing. We just talked about amateur traders. Let's look for some ideas based on the commitment of traders data, which will give us an idea as to what hedge funds, banks, institutional traders, are they buying or are they selling different assets? Well, here's your update. The euro is actually probably one of their favorites right now. The euro is 75% long by institutional traders. So the euro is a top favorite on the long side. Same with oil, notably. They're very long oil. And also they're very long pound, which is really interesting. So if you're a currency trader, pay attention to that. If you're a commodities trader, if you trade gold, gold is still long biased, but let me give you guys a little bit of caution on the gold side. The most recent filing in the COT data that we have here shows that gold had a huge decrease in number of longs and a big increase in short contracts. Okay, so institutional traders are shorting gold recently. And I think that is very worth knowing. If you're trading gold, just know institutional money recently has been selling it, at least as of the most recent filing on the COT data. And then we go back to top setup, see what's generated by the algorithm here. We have euro dollar, Aussie dollar, pound dollar. If you've been on these things have been short biased for a while in the EDGEFINDER, and they've been working out great. Dollar yen's been bullish. So possibly looking to buy some of this dollar pullback on a smaller scale, while I also hold on to my NAS position.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.